You may be wondering, how can the stock market be doing so well when the economy is doing so badly? We're going to talk through that today. Stick around. Welcome back. Chad Smith here with Mike Eklund. We're talking through a question today that we've been getting a lot is, why is the stock market doing so well when the economy is not, right? We've had some pretty negative headlines over the last 3 months. This time around. So the first quarter GDP declined near 5%. The second quarter is looking terrible, right? With 20 to 30% potential expectations of a drop, which is historic. And unemployment rate, of course, is skyrocketed to levels we've never seen. And it's just in the period that we've been looking at. And it's disheartening. It's discouraging. So if we look at what's happening now, the stock market is doing very well. It's bounced back very strongly, but the economy still has negative numbers for as long as we can see going forward here. So you want to share a few thoughts on that, Mike?
Yeah, I mean, everything is happening so fast. Obviously we saw the stock market decline at the bottom about 35% in the month of March from peak to trough. And so, the stock market right now is factoring in the fact that the stimulus package that was passed is worth about 25% of GDP. And so it's kind of looking past the valley of April and looking into the future and thinking that we're going to get through this. Now, some of the risks here is obviously with, we could have a second wave and other health risks that we're unsure of. But I think a lot of the forward-looking view on the stock market is why it's doing much better than the economy right now.
I like to equate it. I've heard this example used by others, and it's like the economy is like a scene in the movie or a movie that you're watching, kind of the worst scene that you get to in a movie. You're like, how is this person going to get out? I use Back to the Future in our podcast. You can hear that example, even though that's kind of a fantasy movie. But the stock market is more like the end of the movie, right? You got to watch the whole movie to see how this thing is going to play out, because the stock market is forward looking, like Mike said there. So if we're thinking about it in those terms, what are we seeing next, Mike, for the stock market and the economy?
Another good question, which is, as you'll hear in the podcast, this is why I refer to getting my crystal ball out. And so the crystal ball is going to tell me where the stock market and where the economy is going to be 3 to 6 months from now. Obviously, that's a joke because I have no idea. And the reality is, the tip is no one else does. As Chad mentioned, the movie reference is a great one. The one that I also hear is the yo-yo walking up the stairs. Investing in the stock market is walking up the stairs while carrying a yo-yo. Everyone focuses on the yo-yo and they don't focus on the fact they're going up the stairs. And so that's really, from the big picture view, is yes, the stock market's going to go up, it's going to go down, but where are you going to be over the long term? And that's where we focus on the podcast on things you can control versus what's going to happen to the stock market or the economy in the next 3 to 6 months.
Yeah, it's really about managing expectations, right? The stock market, if the news is bad, but it is not as bad as expected, then stocks could go up from there, right? And that can seem confusing. But then you have the whole other element of outside influences on the market, right? We've had a strong Fed response, but we like to say watching the news can be expensive, right? So the headlines of the day can kind of coerce you into making certain decisions that may be fear-based in your investment situation. So we want to talk through things that you can control. So in these moments, do the tried and true disciplines of investing still hold true?
Yes, that's a good question, and it's a boring answer, but first of all, you have to have an investment plan. And we've talked about this many times, and this is a perfect example of, if you didn't have a plan, you were in panic likely in March. So what is that plan? Second of all, we've talked about diversification before, but once again, it's very important. And when I talk about diversification, there are more risky assets like stocks, and there are less risky like high quality bonds or cash, kind of like your anchors to your portfolio. That mix depends on kind of how you did in March and how you'll do over the long term. So it's important to have that mix of the two with the portfolio you can live with or sleep at night, as I like to say. And the third thing is, now is a great time to rebalance. You can increase or trim some of your winners recently, might have been some of the high quality bonds, and increase the amount to percentage of maybe stocks that have done poorly. But that's really over the long term. It's kind of boring, but having an investment plan and a process does much better than trying to time the top of the market and the bottom of the market. And that's just based on history and facts. It's also a good time to look at tax efficiency, with the things like the CARES Act, which we did a previous podcast. Is there anything else you could be doing differently this year to help improve your tax picture? And then finally, just to make sure, if you have been impacted financially through either a job loss or income reduction, listen to on the CARES Act, what could you be doing to help support your income in the short term? And so there's options there in terms of uh, access to retirement accounts, bank accounts, savings, or other type of federal stimulus measures. As I mentioned in the podcast, when next time you're concerned, instead of jumping to look at your investment statements, it's a better time to focus and look at your financial plan and make sure you're still on track, because we will have ups and downs, but what you can focus on, is Chad mentions, are the things you can control.
Yes, one of those things is redoing my porch out here. Mike and I decided to take a minute, enjoy the nice North Carolina spring weather we're experiencing here. So if you like our videos and you like what we had to say today and you want to hear more, we have, I think, over 40, 50 other videos here on our YouTube channel. You can subscribe so you don't miss the next one. You can also check out financialsymmetry.com, where we profile all other articles, show notes to our podcast, which are longer episodes. Thanks for joining us today.